Hello everyone, we are back again with our exclusive podcast series by SVAR, the voice of jewelers. Today the market is growing very rapidly in terms of gold pricing fluctuations and had reached the all-time high as well. To understand in depth about it, we have with us Mr. Surendra Mehta, National Secretary, IBJA. Hello Surendraji, welcome to SVAR Talk Show. How are you doing today?
I'm good. How are you?
Thank you for asking. I am doing good, Surendraji. Coming to the topic of today's important discussion, what factors are driving the unprecedented rise in gold prices every day, and are there any signs of market manipulations or any influence by large institutions or government like US, China, or the Russian government in driving up the prices?
See, I would not say it is a market manipulation, but we'll have to understand the global market for this. See, what happens in the global market, they are not like India's MCX market where the deferred contracts are not beyond 2 months. If you go to China or go to USA in the Shanghai Gold Exchange and in the COMEX, you will have a deferred contracts which are very long contracts. And long contract to the extent that they can be as long as for 1 year, 2 year, or up to 5 years. Now, what happens in Shanghai Exchange is that you can enter into this deferred contract by paying X margin. The current margin is only 7%. Now, this deferred contract, somebody enters into this deferred contract by paying 7% of the margin money, and then he continues to run that contract. The issue is that there is no physical delivery happening in this contract because the rule says that no physical delivery will take place in this contract. But here we have to understand two things. That if I am a buyer, I am going long, then somebody is going short also. Because otherwise, what contract I am buying? So I would not say it's a market manipulation, but when I am long and I keep buying the contract on a continuous basis within a span of say half an hour or 1 hour, then what happens? The prices escalates. The prices start rising. And then my position becomes much stronger position. And then all short sellers are. So I would not say this is market manipulation, but these such contracts are being actually run in Shanghai Gold Exchange and in COMEX. And there has been a spurt in, some fund houses entering into such contract, and which has really led to the price war or the price escalation. Now they must be entering into this contract because they must be finding gold prices going higher. Correct? Nobody would enter because if I have to enter this contract and I want to go long, then I must ensure that there is something to go long. There is some news to go long, or I am projecting a price rise in the gold market. So what happens is presently what I feel, although all the other factors are going against the gold prices, like the dollar index is going against the gold prices. Dollar index is rising, but gold prices should go down, but gold prices still rising. Bond yield is rising. The gold prices should go low, but gold prices still rising. The inflation is rising. The CPI data has not been favorable for the gold. The non-farm payroll data was not favorable for the gold, but still gold is rising. So what I feel that there is a geopolitical tension which is likely to occur between Iran and Israel. The geopolitical tension, rather, I would say it's already there, and this might convert into some kind of a war, which probably a fund house going long in this deferred contract must be anticipating. So there is no manipulation as such, but it is the prevailing system in those exchanges which are trapping short sellers in the entire world market, and that is how the prices are rising, and we have to live with it.
All right, so Surendraji, festivities and marriage season ahead is going to get impacted as gold prices are at a record high. Do you foresee any positive signals from technical indicators supporting the price corrections? And what would be the expected stabilized trading range aiming to resume the main bullish trend?
As far as festival season or wedding season are concerned, we are always, as an Indian, we are worried about festivals and wedding. But we'll also have to understand one thing, that as far as gold is concerned, we are price takers and not price setters. We import 99% of the gold in our country. So what happens, the price is predominantly decided by these bankers or miners who are exporting these goods in our country. So basically, India as such have no role to play in fixing the price of the gold, except that we just take the import value, multiply it, and then add our duty value to it, and this leads to and we arrive at a one particular price, which is a domestic price. Now, the point is, since we are a country where nearly 700 to 800 tons of gold is consumed every year, about 300 tons of gold is recycled every year, our requirement remains the same, irrespective of whether the price rise or price go down, because of passion for gold in our country. We buy gold during festivals, we buy gold during wedding, we buy gold during birthday celebration, we buy gold for anything. Like even World Gold Council has been promoting that gold can be bought on every occasion. So this has been the trend in our country. So what I feel is that the purchasing power of the people will definitely go down as when the prices rise, especially when the prices do not stabilize. So in the market where the prices keeps rising, the purchasing power goes down, or the caratage will go down. Suppose I want to buy a 200-gram set. 2 months back, it would have costed me 1,20,000. Today, it is costing 1,40,000. So either I will buy 15 to 18% less gold, or I will reduce my gold purity by 15 to 18%. So instead of 22 carat, I would go for 18 carat. Or instead of, say, 200 grams, I would go for 160 grams or 170 grams. So under both the circumstances, the total consumption of gold in our country will get reduced. And so the total import will reduce.
Okay, so Surendraji, how is the jewelry industry coping with the sudden surge in gold prices, and what strategies are they implementing or can be implemented to mitigate its impact?
See, here I would have to say, the jewelry industry in our country is highly unorganized, uneducated, do not understand the market sentiments, and do not want to take, risk with the rising prices, do not understand how to manage the risk with the rising prices. I would rather correct myself. And they are just, they are only watching what is happening, not taking any action. And eventually, what will happen? See, recently also, I have seen that at this price also, they are passing on goods on a credit basis to the retailers. Manufacturers selling goods to the retailers on a credit basis. Now, the manufacturer need to understand at this point of time that why he is selling these goods to the retailers. It is just to showcase these goods in the retailer showroom. The retailers eventually will not have any market at this price. But still, our jewelers, our manufacturers in our country want to take such risk, and they are taking such risk for 0.5%, 1%, or maybe 0.25%. So I would rather say highly uneducated, highly unorganized, and the manufacturers and wholesalers do not understand the risk management at all. They must learn from the bullion dealer. They must stop selling goods on credit basis. The only alternative to the only solution to this problem is stop selling goods, stop selling your jewelry to retailers on a credit basis. Unless the jewelers do this, one fine day you will find some few of the jewelers being trapped in the vicious circle of There is no market, so retailers not paying manufacturers, wholesalers not paying manufacturers, and eventually manufacturers not giving money to the bullion dealers. Now, most of these jewelers also buy bullion on an unfixed basis, either from bank or from the bullion dealers. So eventually what happens is the entire credit cycle goes haywire. And which is not a right thing. Eventually, what is bullion? In India, we treat it as currency, but the worldwide, we treat it as a commodity, but worldwide it is treated as a currency. So manufacturers are still not understanding that they are dealing in currency. It is no longer a commodity. When the prices of a commodity rises continuously for 10 years beyond inflation, the inflation in our country has been 6 to 8%, but the gold prices are rising almost on an year-to-year basis by 11 to 12%. It is no longer a commodity. The financialization of gold is happening, and under such circumstances, you cannot sell anything in credit. Can you buy Infosys share on credit from the share market? Can you buy a Reliance share on a credit basis? Not possible. Then why these manufacturers are selling goods on a credit basis? I do not understand. When the financial market do not permit credit sale at all. In fact, if you go to the exchange, there will be T+1 settlement or T+0 settlement. You go to equity market, there will be T+0 settlement. You buy Reliance share today, you have to pay money today itself. If you don't pay money, tomorrow it will be auctioned and you will be penalized heavily for that. So the jewelers need to understand that they are dealing in a commodity which is now getting converted into a financialization product. And if they do not manage these risks, then probably they would be certainly in trouble.
Rightly said, Surendraji. Gold is highly important when you talk about Indian market, as it is linked with our cultural significance, and we look at gold as an investment. Do you suggest this is an ideal time for the consumers to invest in gold or not?
See, I would say that one must keep buying gold at any price. Only thing is that you must divide your total investment or an proposed expenditure on the gold on a year-to-year basis. Suppose you want to invest 1,20,000 rupees in a year, then divide it by 10,000 every month. If you want to buy jewelry of say 2,40,000 in a year, then divide this by 20,000 every month, or at least divide this by 60,000 every quarter. So if you do not do this, then you are going to trap into either the you will be buying something at a high price or something at a very low price, and chances are that you will always buy at high price. You will never be able to buy at a lower price. So what is important, we'll have to understand. See, in 2015 the prices of gold were 2,684 rupees. Today it is 7,260 rupees. It is almost 100 and I think 80% return. So on a year-to-year basis, the gold has always been giving an excellent result. So either you invest in gold, or you invest in jewelry. By investing in jewelry, you can also flaunt with your jewelry. You can please your nears and dears ones. You can please your wives, your girlfriend, your parents, your sisters, your daughters. So I personally feel that buying gold in India is cannot be ruled out. Let me say like this. What is important is earlier I used to suggest that your portfolio must consist 10% as a gold, but now I would say that your portfolio must have at least 15 to 18% gold. Now it is for the consumer to decide, for a jewelry buyer to decide what they want to do. Anyway, I would still like to suggest one thing, that normally I have seen that whenever somebody has a money, they keep buying jewelry. I personally feel that you should buy jewelry with only when it is required. Till that time, you invest in bullion and convert that bullion into jewelry. Because what happens, Today, if you buy something and you want to attend some marriage maybe after 2 years, then the fashions are changing so fast that the jewelry which you have purchased today will go out of fashion in the next 2 years. So eventually you will have to exchange that again, that jewelry to a new jewelry. So why not invest in bullion and convert it into a jewelry whenever required? It may be during marriage, it may be during festival, during parties, whatever, but wherever and whenever. So we'll also have to consider the fact that fashion is changing so fast that you just cannot keep buying jewelry. You will have to keep buying bullion and convert this into jewelry for the latest fashion.
Okay, Surendra ji, what is your expert forecast or market analysis indicating about the potential timeline for the stabilization of gold prices, and at what level are they expected to stabilize?
Well, if you ask me today whether the market will stabilize or not, I do not see this market getting stabilized at all, because this market currently is running on a geopolitical tension, and this geopolitical tension, we all know, this can be between Iran and Israel. There is a chances of war, China taking or attacking Taiwan. Russia-Ukraine war already exists, and if some other third country gets into it, a bigger country like USA or somebody gets into it, then of course this would turn out to be a big war, or I would say even a world war. I don't know. I am not a predictor for war or world war. I am not expert on that. But if you ask me personally, when the prices are rising at a rocket speed, you should not expect a rocket fall. Historically, the gold prices, when it rises, it definitely falls, but there has to be a reason to fall. I currently do not see any reason for the gold prices to fall. We have to understand that in 2024, 42 countries in our globe are going for election, and some big countries like US going for election. What will happen in US? We also have to understand that US has 34 trillion debt in their book, in their balance sheet. So these are, if tomorrow the government changes in the US, then they might look at this 34 trillion, how to ease that 34 trillion. The production figure in US are not as encouraging as the employment figures are. So we are currently not getting any correct data, and China has always been hiding lot of data. China, the data given by China are not relevant because they are not reliable. So in such a situation, I would rather say that we should not think of, yes, a correction of 2 to 3% is possible, but one should not look at fall in gold prices at this moment. But anybody who's trading should trade with strict stop loss in this market. If you do not apply stop loss, and if you keep your position open, whether on a sell side or on a buy side, then you can be trapped. And I have seen that many of the manufacturers, bullion dealers, jewelers, retailers having got trapped in this market because there is no risk management system adopted by them, in spite of they being such a big companies.
All right. So Surendra ji, our last question to you is that, how does IBJA extend its role in regulating the gold dynamics prevalent in current market?
See, as I said, we are only price takers. We are not price setters. We are trying to see that, the market becomes more and more regulated, more and more organized, more and more transparent. And that is the only way we can be successful. If we want to increase our consumption, if we want to increase profitability, we will have to first become organized. We'll have to look at artificial intelligence. We'll have to look at innovative product through artificial intelligence. Unless we do all this thing, this market will die its natural death. I would say that why natural death? Because we'll keep producing same yellow metal design only, and we will not be doing anything. Today, the prices are, say, in Indian market, say 72,000 rupees per 10 gram. Let us presume that this becomes 1,50,000 rupees per 10 gram. Then, are we trying to say that we will sell only 50% of the jewelry what we are selling today? It will not happen. So we will have to bring innovation, some new technology, a combination of some ceramic with jewelry, combination of silver with jewelry, combination of platinum with jewelry, something like that. See, platinum today is $1,000, but gold today is $2,400. So probably platinum would play a much better role, much bigger role in manufacturing the gold industry, in manufacturing the gold jewelry. So I think we are talking to all the jewelers. We are talking to World Gold Council and trying to take their help and explaining to the jewelers also that you will have to activate your risk management system, because eventually you are dealing in an item which is 70 lakhs rupees a kg and not a small item.
Very true and very insightful, Surendra ji. With this, we come to an end of this interactive session. Your views and thoughts will definitely help a lot of our viewers to understand the current scenario of gold market. Thanks a lot for giving us your precious time and sharing your expert views. It was a pleasure speaking with you.
Thank you. Thank you. Thank you so much.